Good afternoon, everyone. Thank you for joining us. My name is Joe Buttram. I'm the CEO of Field Digital. We're a publicly traded crypto-native fintech, and we're using M&A to scale by acquiring all the picks and shovels businesses in crypto. If you know any, come and have a chat. So I'm with my very awesome panel today. We're going to talk about very interesting topics of the day, including our crypto tokens, just equity. We'll start off with some intros, 30 seconds each. Mike, I'll pass it to you. You want to say hello?
Yeah. Hi, everyone. I'm Mike Silagadze. I'm one of the founders and CEO of ether.fi. ether.fi is building the DeFi bank, which is a crypto-native neobank that lets you invest your crypto, deploy it into DeFi safely, securely, spend, borrow against your crypto, and ultimately get off of TradFi.
Hey, what's up, guys? My name is Akshat Vaidya. I am with Maelstrom, which is the family office of Arthur Hayes. We've got a VC fund. We have a liquid strategy, and we're in the process now of launching a private equity vehicle. And we've been in the market for about 3-ish years now.
I'm Chase. I'm the CEO of Susquehanna Crypto. We're a digital asset market maker, and we make markets in a very large variety of products across the ecosystem.
Hey everybody, Zach from Grayscale, run research at Grayscale, which probably you know. It's the largest fund management business in the industry. We run a range of products from ETFs to private placement funds, all focused on crypto.
Okay, awesome. So from, the beginning of crypto, we've had different sort of models, initially beginning of proof of work of why these tokens make sense, right? Moving from there, it's evolved and it's looking closer and closer every single day. Potentially like equity, you have governance rights, there's token buybacks, there's cash flows, there's, tons of things that are looking pretty similar, but obviously they're different. And so this is an open question for the panel, but I figured I'd also put Mike and Akshat heads up here because Akshat, you've been pretty vocal about this stuff online, just to, how tokens look. And Mike, you're one of the folks on the panelists with lived experience on the matter. So, I'd like to hear your guys' thoughts, pro and against this idea.
Wait, what am I against?
Well, I think you're pro or against the idea that, tokens are equity, because I think they're also different in many ways. And then I think Akshat is the pro for this is probably looking closer and closer to something like equity.
I guess the reason that that a lot of DeFi protocols don't just say yes, our token is an equity, is that comes with a lot of baggage that protocols don't want. I think in many ways it would be really easy and convenient to be able to just say that and not have to abide by a lot of the regulatory framework. And so protocols, as a result, have to jump through a lot of these hoops in order to not sort of cross that line where the token is sort of declared by someone as an equity. And that is actually problematic because what it leads to is an absence of fundamentals-based investors in crypto, because for most protocols, for most DeFi projects, the token is just the meme coin with the name of the protocol. It has no real relationship, no claim on the IP rights, no claim on the revenue, cash flows of the project. And so as a result of that, among other things, we see kind of how altcoins or tokens in DeFi in general are trading. In many ways, if you took, let's say, Aave or ether.fi, I think, and just transplanted it into traditional markets, they would be trading at a much higher valuation if you were to sort of just purely analogize the token to the equity. And so what I think needs to happen is to create a framework for token investor rights that allows investors to actually understand and believe credibly that there is some claim on the IP and value that's being created by the protocol, which is something that ether.fi is working on. I don't know if that makes me pro or against or what, but that's my take.
I think it's fair.
Yeah, I mean, I'm also not sure if I'm pro or against this stance, but I think I generally would echo the similar sentiment that from the perspective of an investor, a lot of what we've seen in DeFi, the tokens have obviously just been glorified meme coins. And in some ways, that was easier back when it was, from a regulatory standpoint, safer to do that. Ironically, it was actually we were incentivized by misguided regulators to basically shill even more worthless tokens rather than tokens that had some semblance of connectivity to the underlying value by some of these produced by some of these DeFi tokens. But I think now it's changing, and you can see it both in the regulatory side of things as well as far as demand for tokens, right? You see now there's kind of a decoupling of tokens that have the value accrual mechanism sort of starting to work, decoupling from those that don't. And I think that'll accelerate going forward.
Yeah, I hear all that. Chase, this one's for you. So tokens, are really unique as, sort of a thing to trade, I suppose, because open issuance, free markets, super radically, relative to equities, which are extremely controlled, right? There's tons of rules around things, and, you deal with these flows all the time. I'm sort of curious how you think about token flows in these markets and, relative to this question.
Yeah, I think, tokens could have more visibility, right? There's 24/7 trading, there's global access, but that doesn't always make it more efficient, right? When you look at traditional equity markets, there's clear regulation, there's enforcement actions that are brought, there's resilient liquidity, and you don't really have that right now on the token side. There's more fragmentation. We're still waiting on clear regulatory guidelines. And so if participants can't transfer, risk without dramatically affecting price, I don't think you're going to have efficient markets, right? So while, you have 24/7 price discovery, that efficiency is still lacking.
I'd love to weigh in on all this for a sec. So just to offer my thoughts, the framework that we use to think about this. So again, I'm curious what the debate is. We would say there's two types of tokens. There are tokens that are like commodities, and there are tokens that are like financial claims. Commodities are something that is valuable because it has a functional use and it is scarce, some kind of scarcity. Okay, it has demand and supply. Bitcoin has value because it is useful as a type of money. Ethereum has value because it helps function the network and run a validator. And these things are scarce. They are commodities, and I don't think we should think of them like a cash flow assets. The rest of the stuff in crypto are kind of financial claims, and they do need investor protections. But I would contend that they are definitely not just equities. How we think about this is if you look at corporate capital structures, okay, a company issues certain types of liabilities to fund its business. It issues debt, it issues equities, it issues hybrid instruments like convertible bonds and preferred stock. We believe that tokens will be a fifth type of capital structure for a typical business. It's not a replication of equity once it has investor protections. It should have investor protections, but it has unique features. It can have, in the same way that other types of hybrid instruments like preferred stock and convertible bonds, they have different types of claims on the cash flow of the business, and they have certain types of governance rights for the business. And tokens give you another form of customization in terms of your capital structure. So we are incredibly bullish on the outlook for the token market. I think that we will see enormous growth in tokens. Yes, it absolutely requires that they have a legal framework, but that is what's being built right now. So two types of assets in crypto: commodities and claims, or financial claims or tokens, and we see them as a kind of fifth type of corporate capital structure.
I love it. And you basically answered the question I was going to ask you. And so to add on top of that, one of the things I was thinking about, because I'm buddies with Jason Civilleri, who's at Grayscale, and, he's told me about evolution. And you guys have been at the forefront for so long trying to get these things through, the regulatory frameworks and whatnot. How are you seeing things change right now in regards to this topic? The last couple of years, obviously, huge dynamics and mandates from the White House. I'm curious your thoughts.
Yeah, I think you can just be increasingly forthright about what these things are. I think the lack of regulatory clarity and the enforcement-related approach of the regulators meant that both builders and fund management businesses had to kind of circle around the actual nature of what these assets are. So just to give you an example of how it works for Grayscale, we have products that hold, let's say, tokens like, say, the Aave token. To bring that product to market, you need to go to a law firm and get them to say that on the basis of the Howey test, that this thing is a commodity and not a security. And then by that basis, we can legally stick it into a fund structure. That's not really looking at the economic reality of what's happening with the project and the token. That's optimizing what you're doing to the legal environment that you're in. But we are fixing that. I mean, that's what's incredibly encouraging. We're bringing regulatory clarity. We moved away from an enforcement-driven regime, and so we can be more clear with our clients about what's going on here. Aave is something that kind of looks like a business, and it has cash flows, and you should have claims to that cash flow and to the intellectual property of the thing that you are investing in. And the token wrappers, ETFs or private funds that we offer, they will evolve with that regulatory clarity. So it feels like we're going through a big transition where businesses like Grayscale and builders and developers can just be clear about what they're doing. And if that means registering with the SEC, if that means filing legal documents, that's fine. That's how the market structure works. I think we're moving in a very healthy direction in that regard.
I agree, and frankly, it's very exciting, right? It's a time where we don't have to have all these fugazi token economics that don't make any sense, promises never kept, and like we can get to brass tacks and like why these things could be useful, right? So we're not limited there. And I like how you touched on sort of like how the frameworks affect like doing business, right, in the daily course. And for Chase and Akshat, I'd like to know how you guys like in the current state of things and looking forward, how are you guys making business decisions relative to like what the frameworks are regulatory wise and looking ahead as to like, the tokens and whatnot?
Yeah, I think, you have to be very on top of it, monitoring, the discussions that are going on, weighing in where appropriate, right? I think, one of the things that we harp on a lot is, disclosure is one thing, but liquidity can be one of the best investor protections, right? So in addition to figuring out what we call these things or disclosure requirements, registration requirements, that second piece of market structure is really important, right? So that markets aren't fragmented and investors, they have, yes, the information, but they can also exit their position when they need to without, dramatic price movements.
Yeah, I think for us, there's nothing really actionable yet as far as how we might change our investment mechanisms or the way we negotiate deals or even our due diligence with regards to the regulatory status of tokens. But we're monitoring. We tend to invest at the frontier of DeFi itself. So even if, there's something in DeFi that gets normalized and kind of becomes under the purview of US regulation, it's very likely that the stuff we're backing now will fall just outside of that. And it'll take time for those to be included as well. So I think, as investors, we're a family office, single LP kind of structure. We're pretty risk on, and we're monitoring the regulatory side of things, but we're not going to, say no to a deal that's at the frontier of innovation for that reason.
Yeah, that makes sense. Mike, so you went through the whole token process, and during a very unclear time, right? If you could do it all over again, what's something that you wish could have been done differently? I mean, market dynamics like force certain things and token launches to happen. That if you could have had it your way, what would that have looked like?
In terms of what we can control, I don't know that there's anything dramatically we could have. I guess there's a few things that we did that I'm very glad that we did. We've generally stayed away from a lot of the, DeFi Ponzi-nomic games, which is where you do activity explicitly designed to pump your token that doesn't really serve the product. We've been kind of like autistically very just heads down focused on building a great product. And the consequence of that is I think we've been able to navigate a lot of storms in crypto and DeFi. Partly because we've evolved the product from what was just sort of a yield layer, staking thing to now a broader platform, and just being heads down focused on evolving the product rather than playing token games. I think, as I said, has served us well. The exchange listing stuff, was kind of punitive. Obviously, I think we all know exchanges that can be pretty extractive, but I don't know. I think we got away much cleaner, I guess, or I guess much less cost than others, and I don't know that we would do things differently. What I wish existed in the sort of regulatory environment is just this ability. I think so. Here's the disconnect. Here's the problem. I think teams, whether they're saying it directly or indirectly, make, let's say, implicit promises to investors of their tokens, which is, we're going to build this great product, and the value one way or another, again, directly or indirectly, however they say it, will accrue to this token. And then most teams at some point realize, man, building a product is like super hard. What if instead we just rug everyone and, and like dump the token, do OTC deals and do that kind of stuff. And so, fool me once, fool me twice, fool me, 50 times. At some point, investors, I think, have kind of wised up to it and said, like, look, we don't trust anything anybody says anymore. The only thing we care about is like, hard money being returned to investors, like, buybacks, which is like the least efficient way to return money to investors. But like, that's almost what we're down to, is like, look, just you give me $1, I'll believe you gave me $1. That's it. I don't trust anything else you say. So again, going back to what needs to happen is like protocols that make promises, implicit or implicit, you got to be able to sue them if they don't then deliver on those promises. Like, so the question then becomes, okay, what promises can you make? And how do you create a legal regulatory framework, corporate bylaws, whatever, that allows people to then go and sue, projects that don't deliver on the things that they did. So once that, and I think we're pretty close to being able to do that. And once that happens, I think investors hopefully will start coming back, because they'll have a level of confidence that what they're buying actually has some claim on, real stuff.
Yeah, I hear all of that. And, you guys did things the right way and you're reaping the benefits now, right? And I think, not being short-sighted is like super important for all these launches. And I think about talking about, doing things the right way. I'm curious what the panel thinks as to like, things they would like to see additionally. I know Mike touched on a few things. For me, obviously everyone wants to see regulators do stuff because, they're able to, be top down with, their exercising of like regulations and rules. But like, I would love to see more from the community as well, right? When people are trying things and, good luck to get a bunch of decentralized players to agree on stuff. But like, I think slowly and surely market standards have become more prolific just if like, a couple of the big players start like getting together and having these sort of dynamics, right? When we've experimented with a lot of these things. Like the one I always go back to is like MakerDAO and kind of like, all the governance, hoopla that they have. We've learned a lot. And I think there is a framework here that we could probably implement like as a community, especially since regulators kind of want guidance, right? They want to see from us like what's going on, get feedback. I mean, a bunch of you guys have probably been on the Hill and like, they are very open and active in listening to us about these things. And so anyway, that's what I would like to see. And I'm curious, anyone who wants to jump in, what are some of the additional things that could be implemented in your mind?
I'm happy to start just to give a flavor of people what we're working on. So Grayscale is usually in front of an institutional investor or financial advisor trying to help them navigate putting capital to work in crypto. And this whole thing about what is the nature of tokens is very central. Here's a good example of where it is confusing. Ethereum, okay? Ethereum can provide a cash flow if you stake it. They're probably going to change the reward curve such that the staking reward rate goes down. Is the price of the token supposed to go up or is it supposed to go down? Okay. If it's a equity or a cash flow instrument or a financial claim, less cash flow means lower value. If it's a commodity, then less issuance means more scarcity, which means value goes up. Okay, so this is not exactly an answer to the regulatory question, but just to give a sense of the stuff that we're working on frequently, it's these types of topics. People have a hard time understanding what tokens are, what they're used for, how to think about investing in them. So we try to give clear classifications, things like these are commodities, these are financial claims, and that helps answer very simple questions like, is the price supposed to go up or is the price supposed to go down? So I would like to have clear market discussions on these topics, and that'll help investors understand how to confidently put capital to work in the space.
I agree with that. And like, for us, we're dealing with a bunch of institutions now, and it's kind of silly, but it's very helpful. And it's one of the things they actually are very excited to see from us. But we have like a DeFi thesaurus, right? And there's like certain things that like, it's like, okay, TVL, what is that? It's similar to AUM, right? There's a cultural shift that's happening right now too that, we can get ahead of like you're speaking on. And anyone else have any ideas or thoughts?
Of what we'd like to see? I think, the SEC and the CFTC put out token taxonomy, they're, to your point, seeking comment and all this stuff, which are super helpful discussions. I think, we'll see what happens with clarity, and I think where we're all coming out is you don't necessarily have to throw the full weight of securities laws behind these things. I think some basic disclosure around, supply, governance, insider allocations, things like that, or go a long, long way. And you won't be stifling innovation or overly burdening anyone. So something down that road, I think, is the best path.
Yeah, for us, what we want to see from founders of protocols, really, I mean, the highest priority is just sharing revenue with token holders. I think, the regulatory stuff is nice, but the first and foremost thing that we look at, and, we've kind of said this pretty consistently for the last 3 years, was if you're sharing, obviously if the protocol is profitable and sharing that revenue with token holders, then we're pretty satisfied as token holders. I think the second, if we had to pick a second thing, it would be some of these like Pampanomic games that Mike alluded to with exchanges and some of the shenanigans that have gone on over the last few years with token launches. We just want to see like simple, fair launches similar to Hyperliquid, similar underlining that word there. Again, just clean revenue shared with token holders.
Can I ask a question about that? Do you want to see it shared right away, or do you want to see them invest in the project to try to find growth? And is it related to this trust issue that came up before?
Share a percentage. Yeah, if they need to be investing in the business. They can't share it all, but share a percentage with token holders and let us assess.
Some immediate cash flow return.
Yeah.
Okay.
And I think we have about 5 minutes left. Okay, great. So I guess we've spoken and touched on a little bit as to what regulations look like. Genius can change up a little bit wherever clarity lands. Just curious if anyone has more thoughts they would like to share with the panel, just on how things are shaping up with all of those bills. And if not,
I'm happy to say I think we're pretty close on clarity. The dominoes have been falling. The nonsense about the lawsuit against Jay Powell was thing one. The confirmation of Kevin Warsh was thing two. These have nothing to do with crypto, but they have everything to do with how the Senate Banking Committee works. And so those things have been clearing a way for a path for clarity. And my take, I'm more of a TradFi guy, I guess, at heart at some level than a crypto guy. And I just have watched a lot of pieces of legislation go through Congress. And to me, the key players have been suspiciously quiet, which is usually a good sign that they don't want to upset carefully negotiated agreement. So Polymarket, as of this morning, is at 2/3 odds of passage this year. I would maybe be a little bit north of that. I think a very promising and potentially a big catalyst for crypto over the coming months.
I guess what in addition to having, my perspective is you actually don't need, it doesn't need to be perfect as far as regulatory clarity. You just need enough there to kind of be able to hang on to. Because what I think needs to happen is for there to be developed and accepted one or two different templates of doing things in such a way that token holders have investor protections and investors can actually, have a level of confidence about what they're buying into, that those just become the norm. The example I've used in the past is, the way Chinese companies ended up being able to get listed on American exchanges. If you actually look into the process by which that happens, I mean, it's just insane. I mean, it's absolute insanity. You have a Cayman entity bank that owns a bunch of shares in China. They create a bunch of deposit certificates, put it in some holding company, and then that holding company goes public. By the end of it, it's what the hell are you actually, what do you own? What investor protections do you have when you hold these ridiculous ADR shares? The answer in a lot of cases is not much, because there has been a bunch of fraud in those, with these types of IPOs. But it just became a template, and boom, now you got Alibaba and all this great stuff that's public on American exchanges. So what I think is needed is one of these like where we just all collectively accept that this particular batch of paperwork is the norm. This is the what gets you the gold star, and then it's just everyone just has to kind of follow those guardrails. Once we have that template, I think what you'll see is a lot of projects in crypto just getting in line. Everyone just follows it. Investors all accept that it's true, and then the capital formation can actually happen.
I definitely agree with that. So for the last minute here, we're just going to shoot off hot takes. For me, one of my biggest ones is discretionary inflation after launch. I think should be more accepted. One of the problems that I've seen over and over again with teams and protocols is that the founders have allocation, they get really rich, and then the early guys get really rich, and then they move on, and then the new guys don't really care anymore because there's no incentives left, right? I think that's something that could really improve the health and longevity of these protocols once we get like better frameworks and people get comfortable around this stuff. Any other ones before we get off?
I think one of the biggest money-making opportunities in crypto over the next 5 years will be teaching the regular corporations outside of the financial services industry how to issue tokens as a part of their capital structure.
Yep.
And somebody in crypto can potentially own that. Maybe traditional investment banks will own that. I think this is going to be a huge profit opportunity for some business.
I like it. Everyone's getting alpha in this room. Glad you joined. I think we're good. Yeah? Okay. Thank you, guys. Appreciate you coming.
Thank you.